R.S. Luna, former ED of SEBI and managing partner of Alliance Corporate Lawyers, joins us right now on the show. Mr. Luna, thanks so much for joining in today in this discussion. This is, in a manner of speaking, a bit of a welcome sign that the time period taken this time around to bar these entities after what came out has been fairly quick. Though certain skeptics would do say that the trial, if I can use the term loosely, started only after there was an expose that happened on the media. What do you make of the order that has been passed against these 7 entities?
I think this order, according to me, throws up 2 very important issues. One is that what should be the standard or quality of the due diligence which the merchant banker should undertake. And second is that the liability of independent directors. Now, first issue if we take up, that what should be the level of due diligence. We need to realize that the merchant banker is an intermediary. He is not an investigating agency. His main source of his due diligence is information which is being voluntarily provided by the company to the merchant banker. Investigating agency can find much more information with a lot of resources available with it. But merchant banker, he has to entirely depend upon what the information is given to him. Now, for instance, in this case, one of these cases, where the issuer company's board, maybe few days, 1 week or so, prior to the issue opening, they had decided to grant a loan to a group company out of the proceeds of IPO. Now, obviously, the object of IPO is different, and this is a wrongdoing. But the point is that whether this information has come to the knowledge of the merchant banker, and if so, and he has not disclosed it, then yes, he is liable. But if that information has not been made available to him, and there is no source for him to get that information, how he can be made liable? I mean, that is the kind of, I'm just giving one example.
Sure.
There could be many other areas where one can look at and see that why this disclosure is not made. But unless you are able to say that merchant banker was in a position to get that information and he has not done due diligence to bring out that information, yes, he should be liable.
So the question mark really, sir, is that, where does the role of the merchant banker end? Because in certain cases, I mean, you can sit back and say that the merchant banker will only act as an intermediary who will receive information and pass it on. But the fact remains that in India, in certain cases, the merchant banker's name getting associated with an issue adds that bit of a credibility to the issue. So should the role of the merchant banker essentially also include making a bit of an auditing process, so to say, to get information that is given to him, but also to scout for information? Because a lot of investors, and you would know this as much as I do, that a lot of retail investors would probably invest in an issue, for example, if an XYZ merchant banker is associated with the issue, because it's a guaranteed norm that these guys would do a proper due diligence. And if that doesn't happen, then it's the retail investor who gets the wrong end of the stick, which happens most of the times.
I certainly agree with you. I mean, I'm not saying that the merchant banker should not do a proper due diligence. They are supposed to do that. And whatever is required to get the information, they must get. They have to be very vigilant. But what I'm trying to say is that one has to appreciate the difference between the power and the authorities, the resources, which merchant banker as intermediary has to get that information.
Okay.
And the investigating agency has those powers and resources.
Sure.
So you can't compare that. Now, I mean, it's not a blame game, but for instance, every offer document is also looked at by SEBI before it is released.
That's true.
One can very well question that why this was not looked at by SEBI when this disclosure is being made.
Sure.
I mean, one can question either way, but what I'm trying to say is that one need to appreciate that he has a limited power and resources. And you have to see that whether the information was within his reach. If it was within his reach, he could get that information. He has failed to get that information. He has not disclosed that. Yes, he should be held liable.
Then where does the buck stop, Mr. Luna, in terms of holding responsibility? Because like you pointed out, if it is a blame game, then every party has a bit, of a role to it. So, is there, can one really put it down on paper on where the buck stops on ensuring that these kind of issues don't hit the market?
No, I mean, the fact is that the companies need to be honest in disclosing all the relevant information which is required. If they are trying to conceal some information and the merchant banker is not in a position to get that information, how that information can be disclosed? That's the issue.
Okay, the other aspect is, of course, as of now, these companies have been asked to call back their IPO proceeds and deposit them in an escrow account. How do you see the procedure from here? Is there a chance that investors will get their money back?
I don't know that the expiry order which is passed, that in fact does not speak anything like that. Because when we talk about the disgorgement, that's what I suppose you are trying to say.
Yes, please.
Now, when you talk about disgorgement, then one has to make an allegation that the accused person has made unlawful enrichment. There's some unlawful gain made by him. Now, as of now, there is no allegation like that, but is only a preliminary stage of investigation.
Sure.
The investigation is yet to take its own time, and during investigation it might come out that certain people have made unlawful enrichment, and then SEBI might pass the order.
Okay. Sir, it's a thin line, but I just want to ask you whether or not this is possible. A lot of activities that would be happening within the boundaries of they being legal because they are not proven. It's being innocent until proven guilty. But the fact remains that if you look at the way some of these stock prices move post-listing, it is a given that the fundamentals of the company do not support the stock price movement. And it's a given that at some point of time the stock price will come crashing down, and history has shown that this has happened. Does SEBI necessarily have to wait for an allegation to be made against a particular set of promoters or a company? Or can, just looking at how the stock price movement has been, or how some trading activities have happened, which are very unusual, mind you, and you would know about it as well,
in some cases,
can SEBI act on its own, is the question. And if so, why doesn't it do it?
No, SEBI has all powers to act suo motu. SEBI doesn't have to depend upon complaint from the investors or any other source.
Sir, so why doesn't it happen? For the last 5 years, we've seen a number of companies in which the issue price may be 100, for example. The stock goes up to 300, 350. Poor retail investors get caught at the higher price, and then we eventually see the stock trading at maybe 10, 15, 20 levels with volumes dipping down considerably.
And this is happening the single day of listing itself.
Why doesn't any action being taken against these companies? Because it's a known fact. We talk about it every day on television that please be careful of these stocks. Everybody, Tom, Dick and Harry knows about this, but no action gets taken against them. Why so?
No, I don't know that whether you need to take action against each and every case, but I would say that in the recent past, SEBI has been passing orders in case of IPO scams. The Rupal Band Panjal case, 18 IPOs were involved. This and a few other cases were there where this kind of things have happened, and SEBI has passed even the disbursement orders. So I would say that it's not that SEBI is not taking the action. Action is being taken. But then, today the kind of market it is, you don't have the real investors. Genuine investors are not there.
Sir, I mean, we can argue about Rupal Band Panchal case as well, because a lot of investors, as I'm told, for 5 years did not get the money as well. So while maybe an act is taken or an order is given, it doesn't really probably get executed as well. But the other part of this thing is, for example, what has been passed right now is that the promoters have to deposit the money that they raised. Of course, it's an interim order, but promoters who have raised the money have to deposit the money back. What about the investors who invested the hard-earned money, trusting a particular promoter in a company, and they do not get any returns? Shouldn't there be a modus operandi which ensures that investors get the money paid back with adequate interest or compensation for the capital resources that they deposited, which they could have deposited elsewhere and made some money? Shouldn't something like that be put into place?
No, I think the fundamental principle is that investment in the securities market is risky. The investors have to be careful.
I agree, sir.
And there cannot be any assured return That if you're investing and if you're incurring loss, a regulator will come to help and to make you compensation for that.
In case of a fraud case, sir, is my question really. It's not about investing in a really good company where there is no fraud involved. But in case of a fraud which has been enacted, my question really is, shouldn't the watchdog be proactive enough to discourage these colluding promoters and other parties involved from actually indulging in these activities in the first place?
I think they have taken actions. I would not say that they have not been taking actions, but maybe much more may be expected, and I think in the near future maybe we can see, because I see historically that the role of SEBI is becoming more and more active. Like for instance, as you said, in this case itself, the expiry interim order has been passed quite fast, though this all irregularities came to notice in September, October, and by December we have got the expiry interim order. I hope that the investigation also is completed at the same pace, because it's very important that the people against whom this adverse order has been passed, they should not continue to suffer indefinitely. Because tomorrow if somebody is not found guilty, what in that case? He has already suffered a lot. He has been debarred from dealing in the securities market. You say merchant banking will not take the new assignment. These people may be out of job. The establishment will be closed. So one needs to take immediate action to see that the investigation is completed at the earliest.
What about the liability of the independent directors then? How is that being dealt with this order?
You see, in this order, they have made all the directors of the company liable. Now, going by the corporate law, one can say that if a company is accused of any wrongdoing, all the directors can be held liable. Yes, that is a well laid down principle, but at the same time, most of the statutes or the laws, they provide that a director can be held liable only if it is shown that what has happened was with his knowledge, his consent or connivance. Now, SEBI has passed ex parte interim order. No opportunity has been given to anybody to explain his position. Now, if this kind of ex parte interim order, further interim order is passed, the persons might suffer. My point is that you need to pass this kind of orders against other directors, independent directors, after giving them opportunity of a hearing. Because there are certain things which may not be to their knowledge. They are not party to those actions. You can take action against the executive chairman, managing director, whole-time director, CEO, CFO. All these people are supposed to be very much involved in the day-to-day activities of the company. But the independent director may not be aware. And without hearing him, you are making him liable. So my suggestion is that in this kind of ex parte order, at least the restraint should be used, that you do not pass the adverse order against them. Call them for explanation. And after seeking the explanation, pass the order if they are found guilty.